Thank you. Good afternoon. Welcome. So we are going to be discussing the future, but we're also going to be discussing the present today. Some of you will know that I've been working in the banking sector and in the market on writing about the future of banking for 15 years now. In 2010, I published the book Bank 2.0, and I'm now working on Bank 5.0, so you're going to get a glimpse of the future under artificial intelligence and how artificial intelligence and quantum and fintech are already going to reshape the future of banking. So what is Bank 5.0? Well, to start that, let me give you a brief lesson. So Bank 1.0 is obviously traditional banking, which evolved from the 14th century with the Medici Bank, back with Cosimo Medici, and this style of banking that still exists today. This is branch-based banking with the traditional products that we've seen before. Bank 2.0 was the era of self-service banking, ATMs, telephone banking, and then internet banking in the 90s. In 2007, Steve Jobs gave us the iPhone, and emerging on top of this platform was new banking models focused on digital banks such as Nubank, WeBank, Kaspi, and others, Freedom here. Then we are now entering the era of Bank 4.0 with embedded banking. And soon we go to the era of Bank 5.0 with artificial intelligence ingrained in our financial services. This is the timeline that has sort of come from the 14th century to today, focused on technology disruption. And this is what it looks like in terms of the emerging financial services ecosystem today. Banking is no longer the sole domain of banks. We have Apple Pay with their wallet ecosystem. We have major technology players, Fintechs and wallets, Alipay in 150 countries around the world. The largest financial institution in the world, by number of customers, is Ant Group, the parent company of Alipay, Lufax, Sesame Credit, and others. And now increasingly we have AI players and other technology giants coming in to financial services with the objective of providing technology-led digital experiences for banking. And this is a big shift because in the past, banks provided financial products, but you had to go to the bank. Technology is enabling us to deliver this utility in real time to customers through the technology layer. This is, of course, Eric Schmidt, and I wanted to play this brief clip because what he says about the future of commerce and industry under artificial intelligence is really a foundational element of where we go from here with banking and financial services. But listen to how he describes the emergence of artificial general intelligence and how that's likely to impact us over the next few years.
How do you see all of this?
Well, first, I hate to tell you, but I think this stuff is underhyped.
Underhyped?
Not overhyped. Because the arrival of intelligence of a non-human form is really a big deal for the world.
And you think it's here?
It's coming, it's here, it's about to happen. It happens in stages. If you look at
how quickly, though? I mean,
well, we used to say 20 years, now within 5.
Within 5.
And the reason is the scaling laws for these systems are continuing to go up without any loss or degradation of power.
So these scaling laws that Schmidt talks about means that this is an interview he did 1 year ago. Today he is saying within 6 to 12 months, not 5 years. This is going to happen very, very quickly, where we're going to see the emergence of non-human intelligence, which is a really big deal, as Schmidt describes it. Now, it's not just AI, but quantum that's going to be reshaping the sector as well. This is the end of classical computing problems and the emergence of new understanding scientifically from a research perspective. And we talk about this era of quantum computing bringing about Q-Day. And you may have heard me talk about this briefly yesterday in the Q&A session. But Quantum Day is a day when quantum computers will be able to break all of our existing RSA encryption technologies. This is what secures our banking industry, our telecommunications sector, military and government secured communications. This is a very major change, and this also is going to happen within the next 5 years or so, a major shift. Now, we put all of this together, and what that means is the world that emerges over the next 10 or 15 years is going to be focused on autonomy, application of artificial intelligence in industry and in banking and finance. Autonomous ships driving on the oceans, delivering packages, maybe a drone that will deliver your pizza or your fast food to your home or your Amazon package, factories that operate without humans inside those factories. This autonomous infrastructure is what's going to separate industrial economies from what we call smart economies in the future. And the biggest and most powerful economies will be those that apply this artificial intelligence or collaborative intelligence at an industrial level. Underpinning that is this concept of smart contracts or digital contracts. And these are essentially the building blocks of how we integrate the financial services system into this robotic or autonomous infrastructure. We already see with smart contracts many of these areas where we're already deploying artificial intelligence-based decentralized autonomous capabilities. You may have heard of the term DAO, decentralized autonomous organization. But just to underpin this, these technologies don't work using traditional core banking systems, nor do they work using fiat currency. We have to use next generation technology architecture, and we have to use digital currencies. And this is why today, stablecoin operations globally are larger than the combined businesses of MasterCard and Visa. And this is going to be a major part of our economy moving forward. China is the most advanced economy in the world when it comes to this level of autonomous application of technology, not the United States. We expect that China will surpass the United States in the late 2030s because of this application of artificial intelligence at industrial scale. I'm not talking about ChatGPT or Claude or Gemini or these types of LLM models. They're important from a conversational and personal AI platform perspective, but the far greater application of artificial intelligence is in automation of our economy. And in this, China is already probably about 10 years ahead of the United States. This is why when we see the alignment of Astana's financial markets with Chinese operators like we saw earlier today, this is a very critical strategic piece. China deployed 227 gigawatts of solar energy last year. That's almost the same amount as the United States has deployed in their 70-year history of the use of renewable technologies. Right now, the US administration is restricting the investment in next-generation renewables technology like wind and solar. And this year, we expect China will deploy 300 gigawatts of solar energy. This puts them well ahead of the United States in energy transformation required to support data centers focused on AI infrastructure. China has 70 dark factories. These are autonomous factories. The reason we call them dark factories is because the lights are off inside the factories because there's no humans working on the factory floor. The only time humans go into these factories is to clean them or to repair the robots that are working. Today, a company like Xiaomi can produce a smartphone every second of the day without a single human on the production line, or an electric vehicle every minute of every day without a single human inside the factory. The US and Europe doesn't have a single autonomous factory of this scale today. This is why China is going to be the world's leading economy moving forward. To power this economy, we need different thinking in terms of the economic systems and the underlying currencies that support this. Smart money. Today, we're looking at tokenization to look at resources and products that we can tokenize so they're machine readable for smart contracts. In-market smart contracts are likely going to be deployed with stable coins like USDT, USDC, the AE coin out of United Arab Emirates, and similar. Then, for major trading alliances like the BRICS, we see China with their CBDC yuan. And in the future, we would expect that these autonomous marketplaces we build based on AI will come up with entirely new methods of value exchange and entirely new types of digital currency. The reality is the more AI we put into our systems, the less useful fiat currency becomes. And this is why we need digital money to make this autonomy work. Stripe is a major player in the platform economy for stablecoins. They're the first major technology player to announce a stablecoin account. And JP Morgan Chase and other major banks are obviously deploying similar initiatives right now. But it is clear that the technology infrastructure required to run this next generation AI-based trading systems and AI-based banking systems is not based on traditional financial services infrastructure, but is net new technology layer. And this is why what we used to call decentralized finance, or DeFi, is today becoming traditional finance as we import those technologies into the banking system. And the big banks who realize this are adapting. JP Morgan Chase has acquired 40 Fintechs since 2021 alone, and invested in a further 80 Fintechs. Understanding they're spending $18 billion a year in digital transformation today. JP Morgan's CEO, Jamie Dimon, has been clear about his fear about Fintechs impinging on Chase's business globally. The largest financial institution in the world today is a technology company. 1.6 billion customers around the world. No traditional bank could grow to this scale in just the space of 11 years, which is how old Ant Group is. This is the parent company of Alipay, Lufax, and other players in the market. WeBank is the largest digital bank in the world, now approaching 450 million customers. And again, this is just in the last 10 years. Their first bank account was opened in April of 2015. How does that compare with other banks in China? Well, Communications Bank of China is the 5th largest bank in China today, and they have just 190 million customers. The largest bank outside of Asia now is a digital pure play bank. Nubank, incorporated or listed in December 2021 with their IPO, founded in 2015. Today, they have 57% of the Brazilian population as customers. They are the largest bank across Latin America. In fact, if you take the next 3 banks combined, Itaú, Bradesco, and Santander, they still don't make up the same size of customers that Nubank has. And this is because of the scaling laws that Schmidt talked about. That WeBank is able to acquire a customer for $1 US for a new customer. Nubank able to acquire in the range of $5 to $7 per customer. JP Morgan Chase, $450 per customer. So this is where traditional banks cannot compete. If you need a signature on a piece of paper, you are already losing market share to these fintech competitors. Nubank also acquired Hyperplane in 2023, late 2023, as an AI investment. This is an AI platform that they'll use to do generative finance or AI-based financial services. Again, you need this type of scale, 100 million customers plus, in order to be able to do this. This limits the number of banks globally that can even deploy AI in this manner significantly. And they're not the only ones. Revolut is going to be the largest bank in Europe this decade. Today they have 50 million customers. How does that compare with other banks in the region? Well, HSBC, a 160-year-old bank, only has 39 million customers. So who's going to be the largest bank in China in 10 years? WeBank. Who's going to be the largest bank in Latin America in 10 years? Well, it's already Nubank, so it's not going to be Itaú or one of those traditional places. Who's going to be the largest bank in Europe in 10 years' time? Clearly, it's going to be Revolut. This means that globally, we're already seeing a restructuring of financial services around technology competency being the primary element of success. Not how much capital adequacy you have, not your assets under management. None of these things are important for this type of scaling growth moving forward, especially with AI. And this is reshaping bank distribution. So since 2015, we've seen a decline in the number of branches globally. We hit peak branch in 2015. Now, you won't hear many central banks talking about this because they're worried that a decline in branches will be politically sensitive. Certainly in markets like the UK, this has been an ongoing debate. But this is because the scaling laws of digital banks are reshaping the economics of banking. The most operationally cash-efficient banks in the world today are technology companies, not traditional chartered or licensed banks. So this is the picture today. If you take the top 20 fintechs in the world versus the top 20 retail banks, it's not even close. The top 20 fintechs in the world command 4.1 billion customers today versus just 2.7 billion customers for traditional incumbent banks. That means fintechs at this level have 50% more customers than the traditional banks who we considered the most stable elements of our economy. And look at their growth over the last 5 years. 200% growth for the fintechs and just 3% customer growth for traditional entrants. What does this mean? It means that banking is now about technology. It's not about your skills as a bank, your history as a bank. Even when it comes to profitability, managing risk, these digital players have significant advantages over incumbents. And when we talk about AI being injected into this, we also understand now that the next generation of infrastructure required to support these types of banks is very different. UPI, the payments layer in India, Pix in Brazil, with 97% of the adult population who've used this over the last couple of years. China's mobile payments networks, Alipay, WeChat Pay, 95% of all retail transactions in China go over these mobile networks. This is the type of real-time technology payments infrastructure required to support artificial intelligence and smart contracts in the future. You can't run smart contracts on the SWIFT interbank network. You can't run smart contracts on the ACH system in the United States or batch-based payment systems. It must be real-time to support AI. And this is what we're seeing develop as the fastest types of payments networks globally. And this is changing behavior as well. 80% of Gen Zs use a wallet as their primary bank account, not a physical debit card. And this is going to mean, if you're in a bank today and you're attending this session and your bank is still issuing plastic cards to your customers, you're using 1960s technology in a 21st century world. It's not the way it works anymore. So this is changing the way we use cash as well. Cash is only going to represent about 10% of our transactions globally today. 60% will be via wallets and 30% via plastic cards and tokenized plastic cards like Apple Pay and Google Pay. And China will probably be the world's first truly cashless economy. All of these other economies shown here are what we call functionally cashless. That is, you can go your entire life in these economies without ever having to use cash or a plastic card. And this is already happening around the world. But the next piece we're going to see over the next 2 years is the use of agentic AI. You'll hear this term a lot more over the next few months and years. Agentic AI is the use of agents, AI agents, that can go out and do work on your behalf. So for example, you might say to your personal AI, I call my personal AI Alfred. Hey Alfred, can you book me a flight to Dubai on Saturday? Put me in premium economy, make sure you don't spend more than $1,000. And my AI will go and do that, right? Now here's a question for banks and other operators in this scenario. How have we attracted customers to the banks in the past? Well, we use things like a black credit card, or we use airline miles, or reward points, or cashback to attract customers to our bank products and services. That won't work to market to agentic AI. None of that will be very useful because agentic AI will be looking at solving your specific financial problem as efficiently and cost effectively as possible. How many banks are even thinking about marketing to AI on behalf of consumers and businesses in the future? Very few. You probably know this guy, Mark Zuckerberg. And he's wearing some pretty funky glasses. They're called smart glasses, Project Orion or Meta. Some of you may have seen the Meta smart glasses with Ray-Ban and Oakley. But just imagine what a world of AI and smart glasses might look like in just a few years' time, certainly by the end of this decade. Imagine walking into a grocery store and getting a message on your smart glasses saying, hey, it doesn't look like you have enough money for your groceries today. Do you need some credit? Or can I transfer some money from your savings account to pay for your groceries? Because your AI knows how much money you have in your wallet, it knows how much you spend on groceries when you go to the grocery store, and it knows you've just walked into a grocery store or supermarket today. If you're in the credit card business, you just got destroyed. Because you're not going to apply for a new credit card while you're sitting inside the supermarket, but your AI can solve that access to credit in real time. Or you walk into a car dealership and you have an offer for financing of your car pop up on your head-up display. Or you walk into a listed real estate property and you get home financing offer in real time. If you're a bank that requires your customers to come and ask for a mortgage or sign a piece of paper to get a mortgage application, you're no longer in the home financing business in this world of AI. You've been completely circumvented by these technologies. So this is the future that is just a couple of years away with AI-based technology, smart glasses, and the application of smart contracts and these technologies. I'll give you one final illustration. This is a clip from a movie, Ready Player One, by Steven Spielberg. You may have seen this movie. It's a science fiction depiction of a virtual reality world. And in this example, the protagonist, Parzival, conducts a transaction, and watch how that might occur in this future AI world. So he walks into the store, he sees the cube, he buys that. Now watch his interaction here. He wants this boot suit. How much is this? And that's the transaction. He just selects it, and then a robot drone delivers the package to his accommodation later, and that's the transaction.
Oh, yeah.
So this is how we're going to conduct autonomous payments and banking in this world of the future, driven by AI and driven by technology. And in this future, as a bank, you're either a technology company or you've given up your market share to another technology player. This is clearly the trend we're on. And over time, over the next 10 or 15 or 20 years, this agentic AI, stable coins, these smart contracts, these autonomous marketplaces are going to create this large-scale machine-to-machine economy. We can expect by the mid-2050s or 2060s that half of the world's largest economies will be run by artificial intelligence without human involvement, because this is going to be the most efficient form of production and commerce that we can expect. But you don't get to play in this world unless you're part of that technology infrastructure. So this is really Bank 5.0. Algorithmic banking, autonomous banking, this is clearly what is coming today. But it requires a very different skill set from what we have traditionally thought of as banking. And as I mentioned yesterday, the two core elements that measure your success in this future is going to be your technology agility and your cultural agility to adapt. Bank 5.0 is coming, AI-based banking, and as I said before, if you want to be part of this, you have to be focused on integrating AI into your own career and into your organizations, because the other option is that you're just going to be displaced by competitors who will do that. Thank you very much for your time today. And please join me at the Futurist Summit in Dubai.